Hello, everyone. I'm Jason Nord, the director of the TIF division, and helping me today is Haley and Lisa. And welcome to County Administrators TIF training. For some of you, this may be very familiar and a refresher, and for others, this may be brand new and a bit overwhelming. TIF is kind of difficult to distill down into beginner and advanced segments. So just be prepared that if it seems overwhelming and you're new, that's pretty normal. And if you've been around the block a long time and seen this stuff before and there's not much new, hopefully the refresher is still valuable and there are a few new bits and pieces scattered throughout. Um, we did split off the general introduction to TIF material into a separate presentation that we held last Tuesday. Hopefully you caught that if you were interested, but it'll be on our website soon if you did miss it. So this training assumes that you kind of have at least the basic orientation, and we're going to focus more on the county roles in this presentation. If you happen to catch my presentation in April at one of the two regional MCATFO meetings, a fair amount of this might be largely repetitive from that, but the section on annual county duties will be all new. And as I mentioned, there's a few new details from 2023 law changes that were passed in May. We'll also be holding a webinar soon on 2023 TIF law changes. We haven't announced that yet, but we're working on it. And we're going to be posting a couple of videos on the 6-year rule changes. Most of that stuff is maybe more interesting to the TIF authorities rather than the counties. But if you do find that interesting, you'll be able to check that out. And I've included some of the changes regarding the 6-year rule in this presentation. So before we continue, let's start with a poll question just so we can learn our audience here a bit. Please let us know how long you've been working with TIF. Haley, if you could get that posted.
And Jason can't see these results, so I'm just going to share them with him. So about a third of them have been here for less than a year, a third for 1 to 4 years, and then a little bit of each in the other categories.
Okay. Well, great. It sounds like we got a lot of new folks joining us, and so hopefully again there will be good information here, and it won't be too overwhelming. But if it is, you get to watch it again and again once it's posted. So, and feel free to send us questions if you've got issues too. All right, well, let's dive in here. Our first topic is going to be about the county's role in responding when a TIF authority is proposing a new TIF district. And just as FYI, if you did participate in the intro to TIF last week, there's a light amount of redundancy here, but I tried to keep it to the minimum. Okay, so for context, it helps to understand the process of creating a TIF district. And to create a TIF district, an authority must first draft a TIF plan, and then the authority must give a 30-day notice to the county and the school district so that the county and the school district have an opportunity to provide comments and feedback. A county cannot veto a TIF district or anything like that. So this comment period is sort of the sole opportunity for the county to offer input or objection for something that can have a real significant impact on your county tax base. After the 30-day notice period, the authority must hold a public hearing where the public can provide comments and feedback. And I would presume that the county and school district could engage at that hearing too, but I imagine that you're more likely to provide your comments in a written form or prior to that hearing. And then the process continues where after the hearing, the municipality may approve the TIF plan and in the process make certain required findings that are necessary when using TIF. And then at that point, the plan must be filed with the state auditor's office and the Department of Revenue. And at some point, a request for certification of the district needs to be made to the county auditor. And the certification process will be the second topic of this session that we'll discuss after this feedback section. So what do you need to know about responding to notifications of proposed TIF district? For you in your roles as county auditors or county staff, the minimum necessary requirement is actually quite simple, but I'm assuming that your county boards might look to you for information on this subject. And this subject as a whole is kind of a bigger topic. So today I'll try to equip you with that bigger context so that you can fully understand the opportunities and the possibilities, um, even if don't always take advantage of all of them. And so first, the basics. The TIF Act requires the authority to provide the county auditor and the school board clerk with two things when they're proposing to create a new TIF district. First, the proposed TIF plan itself, and second, an estimate of the fiscal and economic implications of the plan. The 30-day requirement can be waived if the county and school board provide written feedback. And so you might have an authority someday that's maybe in a rush or trying to fast track a district that might ask you for some more immediate feedback, and that's a possibility. But as county auditors or staff in the auditor's office, your only specific role here is to provide copies of the plan and the estimates to board members. So that could be the end of things here. And the rest of this is hopefully not a waste of your time, but just distributing those copies to the board members, like I say, is the main requirement. And then we'll talk here about the bigger context in case you or your commissioners are interested. Also be aware that authorities are required to provide a separate direct 30-day notice and an invitation to meet and discuss the district with the county commissioner or commissioners that represent the area in which the district is going to be located. And I don't know if they send that notice through you as well, or if that bypasses your attention. It's only required of redevelopment and housing districts. It's not required for economic development districts, soils condition districts, or renewal and renovation districts, which are the other three types of districts. But you may or may not see that, but you should be aware that there's also that second notice. Okay, so what kind of feedback would a county want to offer? I think it probably falls into two camps, either policy comments and considerations or practical comments and considerations. And I'll share a few examples of each. So first, in terms of policy comments and considerations, county board might just generally want to offer their support or their opposition to for whatever its positive or negative aspects may be. And obviously that's the county's prerogative and it's subjective, so there's not much for me to add. But more specifically with regards to TIF, a county could lend its own opinions on the merits of the authority's but-for finding, as this is really the only time that this test of necessity of a district gets evaluated. And the but-for finding is critical to the wise use of TIF, which we'll kind of refresh on here more in a moment. Even if TIF is merited though, and the project is favorable, there still might be size and scale issues that you could potentially comment on out of tax-based concerns. The county may want to see a shorter duration or some sort of net tax capacity sharing, and we'll talk about that more here in a moment. But beyond policy considerations, there's the practical ones. And as a county auditor or property tax administrator, there's an opportunity here for you to just look at the plan for clarity and ask for clarifications on things that you might need to know later when you're certifying the district. And specifically, there's a chance to make sure that the parcel lists or legal descriptions and maps are all matching, and to understand potential parcel changes so that you can head off any later confusion when you're trying to certify the district. But one real practical opportunity stands above those administrative considerations. A county may identify whether the TIF district will impact county road improvements, and you may require that the costs for such county road improvements be added to the TIF plan and be paid from tax increment. And again, I'll cover that here more in a few minutes. All right, so you might wonder why would you want to provide policy comments? Well, it's potentially important because TIF districts lock up new tax base for the duration of a TIF district. TIF decisions are made by the authority, but they impact all the taxing jurisdictions, including the county. The comment period is the one chance for counties to potentially sway the authority's decisions. And a model of the TIF concept will help illustrate here. The general premise from its redevelopment origins is that a property might be blighted and its value might be declining or stagnating. And but for public assistance like TIF, this is expected to continue. And so when a TIF district is created, the original value at that point in time is established or frozen as the tax base for the full duration of the TIF district. But with the public financing of TIF in place, development is enabled and the value increases as a result. And again, the tax rate is still applied to the captured value, but those taxes are segregated as tax increments. They're not part of the tax levy. But then when the TIF district ends, that's when the value goes back on the tax rolls and taxpayers realize the public benefits of the whole endeavor. The captured value that provided the increment is generally viewed neutrally as just kind of the investment that makes the benefits possible rather than negatively as economic loss, given that the development would not have happened but for the use of TIF. But if instead the proposed development would occur without the use of TIF, then the conceptual justification disappears. And when the TIF district is created, the freezing of the base for the duration of the district and the capturing of the value for tax increments represents an economic loss where a tax base that could have supported local levies is instead providing a subsidy to the development. And this illustration is kind of the worst case scenario of what would happen if the development would happen with regardless of TIF. But perhaps a more common possibility is where absent the use of TIF, some different development at a lesser value might occur later during the TIF district's timeframe. In such a scenario, the start of the district does effectively lead to a higher value development, and the capture of value is neutral until the point at which the value that would have existed without TIF begins to represent an offsetting economic loss because it would have been available without TIF. And in the end, there is still public benefit. It's just offset to some degree by the intervening economic loss. And of course, it may not be easy to assess, well, what would or wouldn't happen without TIF. And the but-for test may be somewhat subjective. And this is why a county might wish to weigh in on the city's but-for finding, as it's the county's tax base is at stake. So, and again, it could be a positive or a negative situation. The county might agree with the finding and appreciate that the new tax base will be coming, or it might be more of a critical situation where the county might believe that the tax base is being locked up inappropriately by the TIF district. So it can go maybe either way. But beyond the but-for test and whether a county might be supportive or indifferent or opposed to a project, there's also the matter of how much increment is needed to make the development happen versus how much increment is generated by the district. So for example, let's say you have a district that creates $25,000 of increment each year. So over 26 years, that could be $650,000 of increment. The TIF plan might likely identify up to $650,000 of costs that that they potentially could finance with TIF. But what if the actual assistance necessary to make the development happen is less? What if the developer only needs $300,000 to go forward with the project? It might be hard for you to assess this, but it is a possible area in which you could ask questions. And possible feedback considerations could include suggesting that the plan estimates be scaled back or suggesting a shorter maximum duration than what the statutory maximum allows, or maybe suggesting that some of the new value be shared with the tax base, although that's rare and has only happened a handful of times. And just to dive into that a little bit here, the authority does have a seldom used option to share instead of fully capture all the new tax base. So for example, if a district was expected to generate an additional 60,000 of new net tax capacity, but the district was likely to only need half that to make the project happen, it could say share $20,000 of the new net tax capacity with the tax base rather than capturing it for increments. And in this situation, the frozen base is essentially raised to include some of that new tax capacity and represent some immediate public benefit to be enjoyed by all the taxing jurisdictions for the full duration of the district. But the risk here is whether the diminished increments on the remaining retained captured net tax capacity would be sufficient should the growth in value end up being less than projected due to the actual scale of development or market conditions or legislative changes that impact property taxes. In fact, it's very common that the actual scale of development falls short of expectations. So this is why most authorities choose not to share value. And instead, a more attractive option may be to decertify the TIF district early once captured increment has been sufficient to cover the necessary costs. And this is consistent with the 5-year rule and 6-year rule and their direction to basically identify the core in-district costs in the first 5 years, and then to decertify a district once sufficient increment is available to pay those costs. The idea of those rules is to limit capture to what's needed to achieve decertification and enjoy the benefits of expanded tax base as early as possible. And by the way, in our last legislative report on our website, we have data that shows that early decertification is very common, with almost 80% of redevelopment in housing districts decertifying early, and on average by like 9 to 10 years early. So early decertification has become the norm. The possibility of sharing net tax capacity, though, affects some of the terminology surrounding captured value. So maybe this is a good spot to clarify some of that terminology. If it wasn't intuitive, the original value that gets frozen is called the original net tax capacity, or ONTC. And when the current net tax capacity is greater than the ONTC, then the difference is the captured net tax capacity. And by the way, the ONTC isn't truly frozen, as we'll talk about when we get to the annual responsibilities section. There can be adjustments that are needed, but generally speaking, it's a frozen value. Because some net tax capacity may be shared, we have the idea that might be a difference between the retained captured value versus the full captured value because of some amount that might be shared. But again, this is extraordinarily rare. I think there's only been 1 or 2 districts that have shared value. But it might explain why in your tax systems, you might see a difference between captured NTC and retained captured NTC, and probably those values are always the same. Okay, so then there's the one last very practical option for a county to consider during the comment opportunity, where counties can require that certain road costs be included in the TIF plan and paid from increments. If the county determines that the proposed development will substantially increase the use of county roads and require them to have to be improved, presenting additional costs, and that those improvements and costs are not scheduled within 5 years under current county plans and would not be improvements or costs reasonably be expected to be necessary in the reasonably foreseeable future. The county must exercise this option by notifying the district or the authority or municipality within 45 days, which, by the way, can create a timing issue because they only have to give you a 30-day notice, but you get 45 days to make that decision. So waiting past the 30-day mark can create a mess because it might require them to have to modify the plan and redo the approval process if they approved it right away after 30 days. So anyways, be aware of that option. And but I do think there's probably low usage of this opportunity by counties. In fact, let's do a poll question here to find out what your experiences are. Has your county ever asked for county road costs to be included in a TIF plan and paid from tax increments? So the choices are yes, no, or not sure.
And so the majority of people said they're not sure. One person said that they have used it.
Oh, okay. Yeah, it's based on the first question where it sounds like many of you are new. It makes sense that a lot of you might not be sure as to what the history in your county is. From what I gathered, this isn't a really common occurrence, but yeah, at least one person has indicated it is. And so I think particularly if you have a project, proposed TIF project that's going to generate a ton of traffic on a county road, this is definitely something to keep in mind as an opportunity to engage in this comment period. So one thing we need to circle back to here is the fiscal and economic implications of the proposed TIF district that the authority must provide. The fiscal and economic implications of the district include an estimate of increment to be generated over the life of the district, along with shares attributed to the county and school district levies, a description of the probable impact on city provided services, public infrastructure, and the ability to issue debt, which might be affected by the use of general obligation TIF bonds, and any additional information requested by the county or the school district by written policy or otherwise regarding the size, timing, and type of development. And let's look here a little bit more at this option for you to have a written policy. The TIF Act allows the county to adopt such a policy with standard questions for any authority that proposes to create a TIF district. And if you don't have such a policy, you can still request additional information during that review period, but you must do so within the first 15 days after receiving the TIF plan. And that doesn't reset the 30-day notice period. So if you wait, it gives you less time to get information back and to react, where having a written policy might give you the information earlier. And I thought I heard one county that had a written policy, but at the MCAFO meetings that I presented at in April, none of the counties there had indicated that they had such a policy. But let's do another poll question here to find out to what extent you know. Does your county have a written policy with standard questions for fiscal and economic implications? And again, the choices are just yes, no, and not sure.
All right. In this case, we got half and half, no and not sure, but we did have two people say yes.
Oh, okay, good. So yeah, I think there is at least one county that's put together a written policy and maybe a couple. So something for all of you to consider, if there's specific information that you want to know about a proposed TIF district, that's an opportunity for you. So, okay, and that's the end of our first section here on responding to proposed TIF districts. So are there any questions about this comment opportunity or the TIF district creation process before we move on to certifying districts? Do we have anything yet, Lisa?
I don't see that any questions have been entered in here. So at this time, no.
Okay. Well, while you're thinking or typing, maybe let's do yet another poll question just to kind of put a button on this first section. Just kind of curious as to what people's experiences have been with this opportunity. So the question is, which of the following describes your experience with the county's opportunity to comment? Has the county offered comments but to little effect? Has the county offered comments and had some positive effects come from that? Has the county not offered comments and probably won't? Has the county not offered comments but might going forward, or other, or not sure?
Okay, I'll let the longer one, so I'll give it just a couple extra seconds than usual. And I am seeing quite a few others, so maybe if you have some thoughts, if you could put them in the comments, that might be useful.
Might be a reflection of having a lot of newer people joining us today, which is good. I think it helps everybody to know kind of what is the norm here with this possibility.
Okay, I'm gonna go ahead and close this. So we do have answers kind of running the gamut. Only two people said that they offered comments and had positive effects. The majority said other or not applicable, or maybe they don't know. And then there's maybe 5 people in each of the other categories.
Okay. All right.
Jason?
So yes.
Sorry to interrupt. We did have someone post a question here asking that if a county does have a written policy with questions, if they would be willing to share that.
Okay. Yeah. That's a good idea. So yeah, if you do have a written policy and you want to send it to us, we could figure out how to share that somehow. But if we don't get it, or you don't want to send it through us, I know counties have a lot of different groups that you belong to. So if anyone's willing to share with other counties what their policy might be, yeah, I think people would definitely welcome that. And as far as the poll question answers go, I think it's encouraging that there's a little bit of kind of seeing a little bit of the gamut run. A lot of times in the past, people have said, "No, we don't deal with this," and I think there's a little bit of cynicism because I think people think, "Yeah, we've offered comments before, but it doesn't yield anything, and it's kind of a waste of time, and we're all really busy." And of course, I know you guys are all really busy, so dedicating a lot of time maybe to investigating proposed TIF districts might not be a top priority, but because it is years of your tax base hanging in the balance, it is encouraging to see that some counties are paying attention and offering comments when it's appropriate. So I guess, yeah, be encouraged that it's something you can do, but we also understand that this isn't something that happens everywhere all the time. So. All right, well, let's move on then with the process of certifying TIF districts, which also gets into how to, setting them up in your tax system. All right, the certification process is initiated by the authority making a request for certification, and the county auditor may specify the form and the content of such a request. And again, I think I heard once that one county had done this. They put together their own form that they want filled out when a certification is requested. But I think for most counties and for most TIF practitioners out there that are working with TIF authorities, the requests have generally been letters accompanied over the years by the Department of Revenue's certification request supplement, which had been around forever, but it's now actually discontinued. Revenue's no longer updating it. But despite that fact, I think it's still its use is kind of on autopilot. It's just the thing that everybody fills out. But our office actually created a new and improved certification request supplement that we recommend be used as a replacement for the Department of Revenue's if the county isn't supplying their own form. And I think I heard at the MCAFO meetings that perhaps the use hasn't completely taken off, that there's still a smattering of revenue supplement forms coming in and a little bit of our use of our forms. So again, let's hear what your experience is and do another poll question here on this point. So I'm curious as to which is true for your county, as far as you know. Is it true that you have your own form that you require, that you don't specify your own form, but you see mostly the old revenue form? You don't have your own form, but you mostly are seeing our new form? Or you don't have your own form, but you're getting a mix of the old revenue form and our new form? Or you're not sure if you haven't been experienced with that.
So far, I'm seeing a lot of, I'm not sure, I don't know, and then a smattering of all the other options. One county has their own form.
Okay, well, that's good. So yeah, at least one county's got their own version, and yeah, it's encouraging, I guess, that some people are seeing our form. I think I would suggest perhaps that if you don't have your own form, you might encourage your authorities to send a copy of our new form instead of the old revenue one. That one should probably be phased out because it doesn't have as much. It's our form basically replaces theirs with some additions. So there's no reason not to migrate to our version if you don't have your own. So very good. Well, let's go over our sample form here to identify some of the highlighted information. So let's see. So at the top of the form, we have a little county use only section for just noting the certification request date and the actual certification date. Those two dates are very important to track, and I'll talk more about that in a little bit. The next couple of sections collect information about the entities involved and the submitter's contact information. And then a district information section captures the name of the district, the approval date, the plan type, whether it's new or modification or hazardous substance subdistrict, and the type of district, redevelopment, housing, or et cetera. Then the plan details section is what collects information that when it's applicable, it's really important that you know it so that you properly set it up in your systems, even if all the pieces here aren't necessarily always showing up. So this includes, the first item is whether there's an election to treat a parcel as being occupied by a building that had been demolished. That was pretty rare, and we note the statute there if you ever come across that and need to look up the details about what to do. And then whether any special laws apply to a district, and that one's not so rare. There's actually over 100 districts with special laws, and so you may need to know something about those special laws when you're certifying a district. What the authority anticipates will be the first year, or the year of first receipt of increment, whether they've elected in the TIF plan to delay the first receipt of increment as permitted by a statutory provision, whether they've specified a shorter duration than the statutory maximum, what they anticipate will be the year that decertification is required, whether they're sharing any net tax capacity, and if you're in one of the fiscal disparity regions, what election they made for how to compute the increment for the district. And we'll expand a little bit more on each of these. We also suggest that the certification contains some attachments. The TIF plan is, of course, essential for you to receive, as is a parcel list and/or map, because there can be changes from what was identified in the TIF plan, and there frequently are parcel changes that can occur during the development process. So you need to get inaccurate and updated information to be able to certify a district. The authority should also attach the resolution where the municipality approved the plan so that you're allowed to certify it because it has been approved by the municipality. And then there's a provision out there that relates to making adjustments for properties that had a building permit that was issued in the last 18 months preceding the approval of the TIF plan, which I'll talk more about more in a bit. So they may need to be attaching those building permits if that provision applies. Okay, so once you receive the certification request, you'll then issue a formal certification, and there's a sample format for the certification provided in the Department of Revenue's Auditor Treasurer Manual that's on their website. And in this, you will formally certify the district by certifying the original net tax capacity. And you'll also certify the original local tax rate. And we'll define each of these more here in a moment. The certification of a TIF district is the certification of the original net tax capacity, which is the net tax capacity of all taxable real property in the district. The timing of the request for certification will determine which year's value you use to make the certification. And the cutoff is for requests made by June 30th versus those that come after June 30th. So requests received by June 30th are going to use the previous assessment year, while those that come after June 30th use the current assessment year. So for example, if a request was made on June 30th of this year, the previous assessment year would be assessment year 2022, which are the values for taxes payable in 2023. Whereas if a request were made on July 1st of this year, then the current assessment year or assessment 2023 would be used, which are the values for taxes payable in 2024. The county auditor must certify the ONTC within 30 days after receiving the request, with one exception or allowance that it be done within 30 days of receipt and receipt of sufficient information to identify the parcels. So if the initial request left you confused about the property that needed to be included in the district, then you'd have until 30 days after receiving that clarity about the parcels. And then do not wait until the original local tax rate is available to certify a district. Do it within that 30 days. And as we'll see here, if the original local tax rate isn't yet available, that part of the certification can just be noted as TBD or to be determined. And then you can follow up later when tax rates are available and just kind of repeat the certification with the original local tax rate filled in. It's important to note that the TIF Act defines parcel as being a tract or plat that's established prior to certification as a single unit for purposes of assessment. So you cannot include portions of parcels in a TIF district. If a part of a parcel is not in a TIF district, according to DOR guidance, it should be excluded. It is possible, however, for the TIF plan to identify parts of parcels existing at the time that the plan was approved, so long as they establish them as whole parcels prior to certification. So it's not too unusual to see a TIF plan that identifies a portion of a parcel, but then those generally get made into whole parcels prior to the request for certification coming. So they don't always, by the way, request certification right away after they approve a plan. Sometimes they let some of that activity play out before they make a request for certification. The TIF Act in section 469.177 does identify some specific situations as to how the original net tax capacity should be identified. So those include how to handle exempt property, redevelopment districts where a substandard building was recently removed. That was kind of that first item that we had identified on the sample supplement. Or a situation where a redevelopment district is established in a qualified disaster area, or any districts in presidential disaster areas. So there's some specifics on what to do in some of those unique situations and how to set the ONTC. Sometimes the ONTC may be specified in special legislation as well. So be aware of that possibility. Check out the special law to see if it designates what to specify the original value as. And then hazardous substance subdistricts, which are certified separately from the overlapping parent district. The ONTC of a hazardous substance subdistrict is set in statute to be the original net tax capacity of the parent district minus the cost to remediate the parcels. So typically that's going to reduce the ONTC to 0 for the hazardous substance subdistrict. And then the subdistrict is basically collecting the taxes that are on the value up to the original value. Okay, certifying the original local tax rate is required to be done at the same time that the original net tax capacity is certified. The original local tax rate is the sum of all the local tax rates that apply to parcels that are in the district. And it should be the rate for the payable year that's applicable to the original net tax capacity. And unlike the original net tax capacity, the original local tax rate will not change over the life of a district. And once again, if the rate is not available within 30 days of the request for certification, which is going to be the case for any request that happened after June 30th, because you're not going to know your tax rate for the next payable year until you're calculating taxes after the end of the year. So in any request for certification after June 30th, just wait, just go ahead and certify the original net tax capacity right away within the 30 days, and then certify the original local rate when it becomes available. And the official certification date for a district is the date that the original net tax capacity is certified. Doesn't matter when the rate is certified. As you certify districts, you should be aware there's one prohibition or limitation on the inclusion in a TIF district of certain parcels. A county auditor cannot certify the inclusion of parcels or parts of parcels if a larger parcel had been platted or subdivided that qualified in the last 5 years for green acres, open space, rural preserves, or egg preserves, unless they meet one of two situations, either 85% or more of the square footage of the planned buildings and facilities has to be for a qualified manufacturing facility or a qualified distribution facility, or the parcel or the district has to be a housing district. So idea, I guess, here is that these programs were meant to protect land from development. So you shouldn't be able to go from protected to subsidized development so abruptly, but they made the exceptions, I guess, here that they considered to be worthy enough exceptions. Now, beyond just certifying the original value and the original rate, when you certify a district, you're also setting it up in your in your records and in your tax system. And so there's a lot of important information for us to note or to talk a little bit more about. Some of the information we identified in the sample supplement. And I want to review some of the elements here to give you further context. And the first thing to talk about is tracking important dates. So the approval date is the benchmark date for the election to delay first increment. And it's also, and for that prior planned improvements provision where they have to provide building permits. And it used to be a benchmark for certain duration limits, but that was a long time ago. I believe all those districts have now decertified, so it's not relevant to that. The certification request date, though, there's a lot of things that are connected to it. It's the cutoff date that we just talked about for certifying the values is one of those dates. And it's also the most common date that's referenced in the effective date provisions of new laws. We saw that again this year. Some of the new laws were, effective for districts with a request for certification date after, whatever date they passed the law. So that the request date itself is an important date, as is the actual certification date, which serves as a benchmark for other new provisions like the 4-year knockdown roll provision, the 5- and 6-year rules, and several other provisions. And then the actual first receipt of increment, rather than the anticipated first receipt of increment, is the date that determines the maximum statutory duration limits and what the required decertification date is. So that actual first receipt of increment date is another important date to track. When you're setting it up and you name the district in your county system, it's important to be cognizant of naming it in a way that would enable good communication with the authority and our office and revenue. Counties often will assign a code, and maybe just knowing that code is good enough for your internal purposes. But if that's all you rely on, it can maybe cause communication headaches. So for example, say a city of Spruce created its 5th TIF district and called it TIF 2-1 Acme Widgets, and your county just assigns code 1405 to that district in your system. If you were to name that district 1405 or call it Spruce District 5 because it happened to be the city's 5th district, that's not going to allow clear communication when talking externally. So it's good to incorporate elements of the city name, either like 1405 TIF 2-1, maybe at a minimum, or best is just to maybe incorporate the authority's name for a district and add the code or whatever information that helps you. The Department of Revenue uses 3 TIF codes as part of county reporting, and we also piggyback on those codes instead of creating our own. We piggyback on theirs to track data in our system. So these codes, these are codes that you're tracking in your system for doing your reporting. And the TIF location code is assigned by DOR. So you can look it up in the code tables on their PRISM reporting web pages. So for example, 726 is the code for the city of Bloomington. And sometimes if a city has an HRA or EDA, that authority might have a separate code. Like for example, where the city of Bloomington was code 726, the Bloomington HRA code is 728. So make sure you assign the correct TIF location code to a TIF district. And if the authority is brand new to using TIF and doesn't already have a code, you might have to request, you ask revenue to assign a code for that authority. Then the TIF district code is a 3-digit code that the county auditor assigns when to identify the district. And so when the location code and the district code are combined, they should be unique to a single district. Do not assign this hastily and make sure you keep track of what has been used, because when the same code gets reused, our databases get all fouled up, and as does reporting to revenue, and it could be really troublesome to fix it, and it might mess up your own system to try to fix it. So please keep track of your assignment of district codes and make sure they're unique. And then the hazardous substance subdistrict code is generally just usually 00 for for non-hazardous substance subdistricts and 0-1 for hazardous substance subdistricts. Using something else or changing it from year to year is generally not desirable. Okay, an authority has an option to elect to delay first receipt of increment by up to 4 years by specifying the first receipt year in the TIF plan. This is not allowed though for economic development districts, just the other district types. And the election is meant to avoid a minimal year of first receipt of increment from starting the duration clock. This is maybe more important back when most districts were running their full duration. Let's look at an example here though, where a plan was approved June 2nd of this year, and the request for certification was made before July 1st, and construction is slated to begin this fall, but not finish until next summer. We can actually see two possibilities here for less than full increments. So the pay 2023 year, or based on the January 2nd, 2022 assessment date, would be the base year value. So that means if there was an increase in the January 2nd, 2023 valuation, which obviously wouldn't happen because of new development because it hasn't been developed yet, but might happen just from market increases, then there could be increment in pay 2024 that might result. And then with only partial construction done by January 2nd of 2024, the pay 2025 would also reflect just kind of partial increments. And it might not be till pay 26 that you get your first year of full increments based on the new value. So an authority could elect to set 2026 as the year of first receipt of increment and skip the possibility of collecting 2024 and 2025 increment. And that would make their required decertification date 2051 instead of 2049. And so, and note that sometimes to avoid that first year, an authority might just wait until after July 1st to request certification. That might be why they wait sometimes. But in any respect, the county needs to be aware of these elections to delay first receipt so that increment isn't computed in these early years. So there's a couple more notes here about elections to delay. First, do not rely on what they say on their certification supplement or on any form that you provide. Check the TIF plan to confirm it, because at one time I compared TIF plan for plans to the forms that they send us when we ask them to submit new plans to us. And the forms were incorrect about half the time. And I think sometimes it's clear that they've made an election in their TIF plan, but they don't think it amounts to a delay. They think it's just the year that they expect to get increments. So they don't say that they made an election to delay, even though they did quote the statute. So, and TIF plans can be confusing as to whether they are making an election to delay. So, or whether they're just speculating as to when they're going to get their increment. So let's look at some examples here. So the first example, the plan might say the city elects pursuant to Minnesota Statute 469-175 subdivision 1B to receive first distribution of increment in 2025. So that one's really clear. They quote the statute. It's clear that they've made an election to delay. Second example here, they might say the city expects to receive first increment in 2025 and elects to have the first collection year be 2025. So this is a good situation where on the form they might not note that they made an election to delay because they think it's going to be the year that they expected. But technically, that is an election to delay. Like it would have caused you to avoid generating a 2024 increment if there was a surprise increase in the valuation due to due to the prior example that we looked at. So just make sure you're executing that if that actually is an election to delay. And then other times a plan might just say something like the city will receive increment beginning in 2025. Well, to me, that doesn't appear to be an election to delay. It might just be an expectation or a presumption. And if increment did occur for 2024, the city would be hard pressed to argue that the county auditor made an error in applying an election to delay, especially if they indicated no to the question about an election to delay on the form of the supplement. So So yeah, this is just something that can be a little bit tricky to identify. But make sure you check out the TIF plan and get that identified. Another important factor to identify when setting up a TIF district in your systems is the fiscal disparity election. This applies if you are in a fiscal disparities area, which are the gold areas on this little map graphic. In these areas, the municipality must elect the method of tax increment computation. So in short, the fiscal disparities program requires that a portion of new commercial industrial value has to be shared across a whole area. So it's not specifically part of the local levy directly, but this sharing of this value conflicts with the TIF districts with tax increment financing saying we're going to capture that value. And so to resolve that conflict, there's two choices. With option A, which is the default, the TIF district gets to capture the new value and receives full increment. But the fiscal disparities contribution then has to come from the existing tax base, which causes taxpayers to shoulder more tax burden. But with option B, the fiscal disparities contribution is made from within the TIF district. So the taxpayers are held harmless, but it reduces how much increment gets captured because it's been contributed. So we'll look a little bit more at that later. And lastly, with regards to certification, you need to be aware of and adjust for the prior planned improvements provision. The county auditor must increase the original net tax capacity to include the net tax capacity of any improvements that were approved by building permits issued in the 18 months prior to the TIF district's approval. And the idea here is to ensure that TIF districts aren't capturing value growth that was already planned without the assistance of TIF having been necessary. So if it was approved before permit was issued before the plan was approved, it obviously didn't rely on the TIF. And so an authority has to provide you a list of those building permits when that applies so that you can make these value adjustments to the original value. Okay, do we have any questions about this TIF district creation process? And while you're thinking about that, or maybe while you're typing one to send a question in, let's do another quick poll here. Just out of curiosity on this prior plan improvement stuff, how often do you get permits for prior plan improvements? Is it, we've never seen them as far as I know, we've rarely encountered them, we get some, we see a lot, or you don't know, you're not sure?
We got not quite half of people said that they haven't seen one as far as they know. There's quite a few I don't knows. And there's just a couple of we've rarely encountered them, and one we get some. No, we see it a lot.
Okay, so yeah, these probably aren't super common or typical then. Yeah, and it probably doesn't make sense that there's a whole lot of building permit activity going on prior to a TIF plan being approved. So it may not be something you see all the time, but it's not non-existent. So, all right, how are we doing on questions, Lisa? Have we had any questions?
I haven't seen anything come in.
Okay, well, we'll move right along here then. We'll do this quick. This is kind of a quick section on TIF district decertification, and then we'll take a short break. So by statutory definition, to decertify or decertification means to terminate a TIF district, which occurs when a county auditor removes all the remaining parcels from a TIF district. Doing so ends the collection of increment or turns off the spigot, so to speak. However, even after a TIF district decertifies, the reporting for those districts has to continue until all remaining TIF revenues are either spent or returned to a county auditor. And we do have a large number of districts that report each year that are decertified. So things aren't really done until the books are closed. But maybe from the county perspective, things are largely over when the decertification occurs. So the statute then provides that a county auditor must decertify a TIF district upon the earliest of the maximum statutory duration limit, reaching an earlier duration limit if one is specified in the TIF plan, completion of the actions required under the 6-year rule, or upon receipt of a written request by the authority to decertify the district. Now, the first two of these, the county auditor has to monitor these dates and take the action to decertify the district. So those are the ones you have to be on the lookout for and more proactive about. But for these second two, the county is largely going to be reacting in response to being notified. And with respect to the 6-year rule, that might not have been 100% clear prior to 2023 law changes, where we clarified the process surrounding 6-year rule decertifications. It had always been the practice that an authority would notify counties that decertification was required under the 6-year rule. But there was a bit of odd statutory language that seemed to assume that counties would know and take action. So we cleaned that up in 2023, and now the statute explicitly addresses this process and gives authorities deadlines to let you know that they've decertified under the 6-year rule. The maximum statutory duration limits extended from the year of the first receipt of increment, and the duration varies by type of district. So, for example, an economic development district can collect increment for 8 years after first receipt. That's kind of how it's written in the statute. So that allows them a duration of 9 years of collection of increment. The statute instructs that no increment shall in any event be paid to an authority after these limits are reached. So the county applies those maximum limits. When it comes to statutory maximum duration limits, be sure to distinguish between the actual limit based on the actual first receipt of increment versus the anticipated required decertification date that they anticipated when the TIF district was created. If they indicated they expected to get first increment in 2021 and that they would need to decertify in 2026, but they actually received first increment in 2000, then you would need to decertify the district in 2025. The full increments from taxes payable in the year that a district terminates due to hitting its maximum duration limit shall be paid to the authority. And that's why December 31st is often expressed as the decertification date, although the official decertification date might be a mid-year date. The whole year's increments still gets distributed. Note that this includes the following January settlement. And the other footnote here is that in the past, some districts did have durations based on approval dates and were cut off maybe more mid-year. So you might have some recollections of that being different in the past if you've been around a while. But I think all those districts are done and decertified. So when a TIF district is decertified early, it's customarily done by a resolution. For decertifications under the 6-year rule, let me give you a little bit of brief background here. Early in the history of TIF, authorities were criticized for prolonging districts by finding new costs to spend increment on beyond what was necessary to make the development possible. And so the 5-year rule and the 6-year rule were put in place in 1990 to try to focus the use of TIF and get the new value into the tax base as early as possible. So the 5-year rule provision was created to add a timing element to what was considered in-district or out-district expenditures. Out-district spending is what we call pooling, and there are limits on it. Generally, increment is only considered to be spent on activities in the district if they're spent within the first 5 years or used to pay off bonds or obligations that finance costs in the first 5 years. So therefore, any new uses of increment after the first 5 years are considered out district and have to fit within the pooling limits, even if they're physically located in the district. So this forces any additional use of increment beyond the originally planned activities to have to be within those more limited pooling limits. Okay, the 6-year rule then provides the early decertification requirement. And the 6-year rule was substantially clarified and changed in the 2023 by the 2023 legislature based on suggestions from our office that we had worked on with interested parties. A previous annual limit beyond the general pooling limit was eliminated, And the decertification requirement was clarified to eliminate some ambiguity and to make the requirement based on more on a formula and receipt of a sufficient amount of increment to pay in district costs and obligations. And one part of the clarification was the treatment of pay-go obligations, pay-as-you-go obligations, where the decertification requirement based on increment collections may be deferred until a pay-go note terminates. And I'm sparing you a bunch of the detail here. That's maybe more important for authorities to know and understand. And we'll have a video coming out, some videos coming out on the 6-year rule. And we'll be doing that new laws webinar if you're interested in learning more about the details. But anyways, as far as decertification notice procedures go, if there's a pay-go deferral of the decertification requirement, then the district is considered decertified as of December 31st. I'm sorry if I misspoke. If there was no deferral of the decertification requirement, while the district is considered decertified as of December 31st, county auditors must be notified as soon as practical and no later than the final settlement distribution date of January 25th. And so some of you may be thinking, wait a second, that's really late. And so I know this might be a late date and cause difficulties for you getting the increment stopped for the following payable year if you're learning about it that late. But some of the advocates for TIF authorities had actually advocated for a much later date. They wanted to worry about other things at year end and the beginning of the year and didn't want to have to notify you till much later, which would have then made it impossible for you to stop increments for the following year. So this date was a kind of a compromise. And if the decertification was deferred due to a pay-go note, then they have to notify you by December 31st because they should know that, and the January settlement payment won't be kind of in flux at that point. So anyways, you might want to consider communicating with your authorities, just kind of give them reminders to notify you as early as possible rather than waiting till these last possible deadlines. If the late timing of being notified of a decertification makes it so you're unable to prevent the increment from being calculated for the following payable year, then you are given authority to simply just redistribute the tax increments that get calculated in the same manner as you would redistribute excess increments. You don't have to go through the process of first distributing them and having the authority return them to you. You can just cut to the chase and go ahead and redistribute them. But if you do end up distributing them, the new law, though, also requires that they be returned to you so that you can go ahead and do the redistributions. When a district decertifies, we require the completion of a confirmation of decertified TIF district form. And the purpose of the form is just to ensure that the authority, the county, the OSA are all on the same page. The authority fills out Part A with kind of the basic information, and then the county completes Part B by confirming that information or noting any discrepancies. And then the authority has to send us a fully completed form, but we always do appreciate it when you copy us when you're returning it to the authority, because they don't always follow up and notify us. So we really appreciate you copying us on that. And for early decertifications, we also ask the authority to provide copies of the resolutions where they decertified the district. And this currently is a paper-based process. It's kind of a scan and email process, but we've been hoping for a while now to streamline this and make it more of an efficient electronic online process. But we've got, so much IT, there's always too much IT work that people want and not enough time. So, but hopefully that project will get done soon. All right, one last provision here to note in this section is relates to delinquent property taxes received after decertification. The county auditor may only distribute delinquent collections as tax increments if the parcel was in the TIF district when it was decertified, the taxes were delinquent and not just past due, their non-payment caused an obligation to which increment was pledged to either go unpaid or to be paid from other sources, and the authority provided to the county auditor the information needed to administer these payments. Otherwise, delinquent receipts after decertification should not be distributed as tax increment. They should be just distributed as ordinary property taxes. All right, let's now get into the discussion of the annual county responsibilities, things that counties need to perform or monitor on an annual basis. Okay, we first we talked about proposed districts and certifying new districts, but you should also be aware that TIF plans can be modified or amended by an authority at any time during the district's lifespan. So one activity you might encounter in any given year is responding to a modification. And some modifications are going to require the county auditor to perform an administrative action, while others will not. So for example, if parcels had been added or removed, or the duration changes, or an election to delay is added, or there's a change in the fiscal disparities option, those are all things that would affect the county administration. Alternatively, if they just adjust some budget lines, move some dollars around or something, those aren't going to require any attention from the county side of things. Also be aware that some modifications are going to require the full notice, hearing, and approval process for new districts, while the more administrative changes do not. So the ones where you might get, again, another notification and comment process are those that they include enlargement of the geographic area of the district, which, by the way, isn't allowed after the first 5 years. Reductions in the geographic area that cause an increase in captured value, which would happen if the current value for a parcel happened to be less than the original value. An increase in bonded indebtedness, a determination to capitalize interest, an increase in the share of captured net tax capacity being retained, an increase in the estimated cost to be paid with tax increment, and a designation of additional property acquisition. The original net tax capacity, as I mentioned earlier, is generally frozen for the duration of a district, which is loosely true in concept, but technically there are a number of situations where a county auditor may have to make an adjustment from year to year to the original net tax capacity of a district. So a county auditor should make an ONTC adjustments when there are changes in the classification of parcels in the district, when legislative change, when the legislature changes class rates that impact any of the parcels, when TIF parcels are changed from exempt to taxable or taxable to exempt, when districts are enlarged or reduced in size, when TIF parcels cease to qualify for green acres, open space, ag preserves, or rural preserves, when TIF parcels have value increased under the plat law, when TIF parcels cease or begin to qualify for any exclusions, when a disaster declaration impacts TIF parcels, and when TIF parcels are affected by a court-ordered abatement, stipulation agreement, voluntary abatement, or commissioner revenue order. So the TIF Act provides for how the ONTC should be adjusted in each of these cases, and you can find the references to that in more detail in our TIF County Guide. But clearly there is a good list of here of things that you should look for and identify each year as to whether or not they apply, and so you can make the adjustments when they do apply. And note that many of the ONTC adjustments have to be explicitly certified to the authority. And more generally, there's a provision that requires county auditors to annually certify to each authority the captured net tax capacity of each district as in proportion to the district's total net tax capacity. So this certification would also identify any shared net tax capacity. That's a requirement if anyone was actually sharing net tax capacity. And I don't have an example of what this might look like, and it probably varies from county to county in format, but just note that there is this annual requirement in statute to be certifying certain amounts. Moving from values to tax increments, the county auditor must annually calculate tax increment. This is largely just, it's as simple really as the tax on the retained captured value for those of you that are not in a fiscal disparities area. For those of you that are in a fiscal disparities area, we previously noted the two options, which are repeated here. But a couple of minor notes. Option B was required for economic development districts that had a request for certification before June 30th of 2014. And the chosen option of computation is normally fixed for the life of the district, but it can be changed once from option A to option B. It can only change from B to A under rare special deficit conditions. The option impacts tax increment calculations primarily by affecting what you identify as the current net tax capacity, and it affects the tax rates. I'll show that here in an example. So to guide those of you, and again, this might not apply to many of you, but for those of you that it does, this is kind of a simplified example for general education purposes. So please rely on the Department of Revenue for more specific or detailed calculation instructions. If our net tax capacity for a single TIF parcel is currently $60,000 and the original net tax capacity had been $10,000, there's a growth of $50,000. Then in this example, we'll assume it's all commercial industrial. So under fiscal disparities, let's say 40% of the CI growth, so 40% of the $50,000 or $20,000 has to be contributed to the fiscal disparities pool. So under option A, where the TIF district makes the full capture and the fiscal disparity contribution is made from outside the district, we would determine that the current NTC is $60,000. And this exceeds the original net tax capacity and gives us $50,000 of captured net tax capacity. And for this example, we'll assume there's no shared net tax capacity. So that's also the retained net tax capacity. And under this scenario, let's say that the tax rate calculates out to 116.688%. Kind of spare, I've omitted the details of how that's calculated here, but the only point you have to understand is that this rate is going to be slightly higher than the rate under option B, because the tax base got a little bit smaller because of the contribution coming from outside the TIF district. So that contribution is going to slightly impact the rate. So then applying this rate to the NTC gives us 58,344 of tax increments. Under option B, we would make the same $20,000 fiscal disparity contribution, but here we're making it from the current value in the district. So the current value then is only $40,000 because the $20,000 was taken out of the 60. So the captured net tax capacity now is smaller at 30,000. And again, the rate is going to be a little bit lower because the tax base didn't have to make the contribution. And so under this example, the tax increments are 34,864. And this example shows how option A provides full capture of tax increments, but causes rates to be higher, while option B can significantly reduce the amount of TIF capture if that approach is used. All right, when option A does apply, the increase in property taxes due on other properties as a result of the contribution coming from outside the district actually has to be displayed on annual disclosure statements that authorities have to publish annually. So authorities might be contacting you county folks for some assistance in identifying the data that they need to make those computations. And the instructions for those computations are provided on the Department of Revenue's website. You could go there you could refer them there or look there to see what information's needed. And I actually recently saw that one county posts all these calculations on their website for their TIF authorities. So kudos to them. All right, so now beyond fiscal disparities, there's another calculation provision that for everyone to understand. Tax increment might be limited to less than the full tax on the retained captured net tax capacity. Tax increment is limited by statute to the tax generated by the lesser of the local net tax capacity tax rates or the original local tax rate. And this is why we had to certify that original rate when the district was certified. If the original local rate is the lesser rate, tax increments are limited to just a portion of the extra tax that's applied when you apply the tax rate to the captured value. And the rest of that tax is called excess taxes. I'll show you an example here in a second. So please note, though, that excess taxes which are not tax increments, should not be confused with excess tax increments, which are tax increments that are, the excess tax increments are increments that are received in excess of what the plan authorizes. But excess taxes are additional taxes generated on the retained captured net tax capacity when the current rate is larger than the original rate. This was a provision that the legislature enacted because they didn't want TIF districts to benefit from rising tax rates. They only wanted TIF district increment to be generated by increases in value, not increases in rates. And the county auditor, therefore, must determine and distribute excess taxes and appropriately limit tax increment computations. And here, I think, is a graphic that helps illustrate this a little bit better if it hasn't been clear. So on the x-axis, we have the value, and on the y-axis, we have the rate. So the blue area here is the taxes on the original net tax capacity. So no matter what the rate is, all of those taxes are part of the regular property taxes and get distributed to the taxing jurisdictions accordingly. And then as the value increases beyond the original net tax capacity, that's when you get captured net tax capacity. And the taxes on this captured net tax capacity up to the original local tax rate are tax increments that do get distributed to the TIF authorities to finance the activities. But if the rate increases above the original rate, those additional taxes on the captured net tax capacity are deemed to be excess taxes and not tax increments. And they're basically bonus revenues distributed to the county, city, and school district in a special manner. So excess taxes are distributed to the municipality, the county, and the school district based on whose current local tax rate produced the excess. Other taxing jurisdictions like special districts don't receive any excess taxes. Each of the three entities' shares of excess taxes are determined by dividing their tax rate increase by the sum of the rate increases for the three entities. And in the case maybe where the only increases were for special taxing districts, then any excess taxes caused in that situation are just distributed to the municipality, the county, and the school district in proportion to their respective tax rates. But let's look at an example to help make more sense of this. And by the way, this is based on our interpretation of what the DOR has instructed. So please rely on their guidance if there's any differences or changes from what you see here. But the first part is determining the amount of excess taxes. So here we show the current and the original tax rates for each jurisdiction, and we show any local tax rate increases. And I know I know the decimal points really do matter, but for simplicity, I'm skipping the decimal points just to kind of keep it looking cleaner. But yes, I know the decimals are very important. So the total tax rate now is 125% versus the original local tax rate of 100%. For an increase of 25 percentage points, the county rate increased 7 percentage points, the city rate increased 15 percentage points. The school district rate had a 0 increase because its rate actually has gone down. And the other special taxing districts had a 6 percentage point increase. So if the retained net tax capacity is $10,000, for example, then because the original local tax rate is the lesser rate compared to the current rate, then tax increment has to be limited to the original local tax rate multiplied by that value. So the tax increment has to be limited to $10,000. But the full rate is going to be applied to the retained captured value. And so there's going to be $12,500 of taxes on the retained captured value, but you have to subtract out the $10,000 of tax increment to identify the $2,500 of excess taxes. So then let's look at how do you distribute that. You determine the county, city, and school district distribution shares by dividing each of their increases by the sum of those three increases. So note here the increases were 7%, 15%, and 0, and those total 22% and not the full 25 percentage points because we're ignoring special districts. And these fractions or shares are then applied to the $2,500 of excess taxes to determine the distributions. And note again, this is only the process of distribution for excess taxes. When you have to redistribute excess tax increments or maybe a remedy payments or just returned surplus increments, you don't follow this process. This is just a process for excess taxes only. And so now let's switch over to excess tax increments. Excess tax increments are those that exceed the amount needed to pay authorized costs for the costs that were authorized in the TIF plan. So authorities must determine this amount annually, and they do so using our TIF annual reporting forms. They are required to either use excess increment to prepay debt, or they have to return it to the county auditor by September 30th of the following year. And so when these returned excess tax increments are received, the county auditor must distribute them to the city, county, and school district in proportion to their tax rates. So that's pretty straightforward, no fancy calculations. Like for excess taxes, you just do a distribution of the three entities' rates for the current year. You're required to notify the Commissioner of Education anytime you make a distribution to a school district. And it used to be the requirement that you'd have to notify them within 30 days of making a distribution, but that was changed recently. And so now it's just an annual notification. So you must notify them by February 1st of each year of any of the distributions that you made in the preceding payable year. You may receive returns of other increment aside from what is formally calculated as excess tax increments. So for example, if they have unneeded surplus amounts, even though they might fit within what the TIF plan authorized, they can just return that for redistribution in the same manner. So from your side of things, you may not care whether it's official excess increment or surplus increment, you're redistributing it in the same manner. You might also receive payments or returns of increment that were made to remedy a violation of the TIF Act. And you also distribute those as if they were tax excess increments, with one exception. Statute has a process in place where we make formal notices of noncompliance and where an authority might have a 60-day response period. And if they don't make payments or remedies during that period, or before like a county attorney commences action against them, then they won't get a share of any subsequent remedy redistributions. And because the statute requires us to forward unresolved issues to the county attorney to pursue, and that's why the county attorney might be getting involved. And but it's been several years since notices have not been remedied within that 60-day period, requiring the different redistributions and referral to a county attorney. So we'd likely be letting you know in situations where you shouldn't be making a distribution to the authority. Okay, another calculation and distribution item to be aware of is the OSA's enforcement deduction. The county treasurer must deduct 0.36% from all distributions of tax increments, which were then sent in to fund our office's oversight functions. So note, you should not be deducting the 0.36% from redistributions of returned increments, because they're no longer tax increments at that point once they're redistributed. You will report the amount of these enforcement deductions on the county TIF information form that we'll look at a little later. And you'd remit these amounts to Minnesota Management and Budget, or MMB. These are to be included with monthly remittances for vital statistics and real estate surcharges and fees. So please make sure when you do send them to MMB, you use this MMB form and identify them on there. We've had a really difficult time getting them to properly identify and send us these TIF enforcement deductions if this form isn't being filled out by the county when you send them the money. In fact, we've supplied a copy of this form in the handouts that were emailed earlier. So please make sure you're using this form. All right, moving past annual tax increment calculations and distributions, there are several other annual responsibilities for counties. The first one we've already covered, which is to identify and enforce duration limits. so that no increments are paid after duration limits are reached. When we talked about this, I noted that the required decertification date is based on the actual first receipt of increment, not whatever they had anticipated or initially noted. At one time, I compared actual first receipt dates to anticipated first receipt dates that were mentioned in TIF plans, and I found that 25% of the time the TIF plan was not correct in what they anticipated. So therefore, the anticipated required decertification date that might be mentioned in TIF plans is also going to be incorrect a lot of times. So really you have two duties here. To identify the maximum statutory duration limits, alternate duration limits set by special law or in the TIF plan, or upon receiving a notification to decertify early, whether that's for the 6-year rule or just by the authority's choice. And then the second responsibility would be to update duration limits in your system when actual first receipt of increment occurs so that you are tracking the proper required decertification date. And the county TIF guide may touch on some other details. So you can consult that and the statute when you have questions or when you have unique situations that arise. Another time-based provision in the TIF Act is that the county auditor is responsible for the 4-year knockdown rule. If no activity commences on a parcel in accordance with the TIF plan after 4 years from the date of certification of the original value, then the parcel must be knocked down such that it will no longer capture value or produce increment. And activity in this context means things like demolition, rehabilitation, renovation, and site preparation. It also includes adjacent street improvements, so long as there are things like new, relocated, or rebuilt streets and not just overlays or maintenance. But installing utility services like sewer and water does not count as activity when it comes to the 4-year rule. So to apply this, the statute requires that authorities provide evidence or documentation to you by February 1st of the 5th year following certification. So of course, compliance with that expectation is perfect, right? No, a lot of times authorities are not going to be on top of that and sending you the information. So I think counties are well advised to keep track of which districts are hitting that time frame and maybe prompting authorities to send you that information so that you can enforce the 4-year knockdown rule. You should compare the documentation to the TIF plan to ensure that you have consistency. And if no authorized activity takes place, the statute indicates that the ONTC of the parcel must be excluded from the district's ONTC, which is a little bit cryptic, and I'm not sure exactly how you operationalize that in your systems. You might be tempted to think of it as just removing the parcel from the district, and maybe that's how it works for effectuating it. But technically speaking, those parcels are still in the district. They've just been knocked down, so they're not producing increment anymore. And again, not knowing exactly how your systems tackle this, I can't give you exact details on how to handle that. But if development does subsequently commence on a parcel, it can be restored to the TIF district and again produce increment. But if that happens, when you do restore it to the TIF district, the original value should be set as of its most recent value and not the original value from when the district was originally certified. Another good annual check or review is to look for any special laws that may affect districts in your county. There was another big batch of them passed this year. Special legislation could require action by the county auditor, like adjusting a duration limit or an original net tax capacity. For 2021, authorities reported 117 TIF districts that had special laws. So this is not a rare or unusual thing. And some special laws may require approval by affected local units of government. So there's a chance that the county to potentially approve or refuse the effectiveness of a special law. And the most common special law provisions include 5-year rule, duration extension, 5-year rule extensions, duration extensions, changes to the rules for creating a TIF district, like deeming them blighted maybe, or changes to various limits on the use of increments. Another potential responsibility is to respond to and withhold tax increment based on a notice from our office. Authorities have to submit annual reporting to our office by August 1st. And if we still haven't received a copy of those reports by October 1st, we notify the county auditor to withhold distribution of increment. And so you would withhold 100% of all subsequent increment distributions until you're further notified. And when we do eventually get the report submitted to us, we have 5 days to notify you, and then you would have 15 working days to release those increments. And I guess the good news is that if you're earning interest while you're holding on to it, you get to keep the interest. So the county does. Hopefully this next one is not an annual responsibility, but if a county auditor makes an error or mistake, there is a statute to address that. It provides these broad options for resolving the issue. You can certify the ONTC at appropriate values for later years and extend the duration. You can recertify affected parcels and extend the duration. You can recertify or correct the original local tax rate. You can adjust tax rates for 1 or more years to recoup amounts advanced or and recoup amounts that were advanced to replace the reduced increments, or you can take other appropriate action so that the increment compensates for or offsets the error and correctly reflects the application of the law. So that last one is a pretty broad catch-all possibility. And the errors or mistakes that we're talking about here are errors made by the county and include substantive matters like decertifying a district incorrectly or failing to certify a district or incorrectly certifying it or otherwise failing to correctly compute the amount of increment. This isn't about minor mistakes like having noted a wrong date where noting that wrong date didn't have any further consequences. And there is some process involved here. The county auditor must notify the authority or municipality in writing of your proposed solution 30 days prior to taking the corrective action. And naturally, there's probably some back and forth communication going on between the authority and the county where the authority is saying, hey, we didn't get the increment we were expecting. And you're kind of communicating back and forth to sort it out and figure out how to correct it. And that's great. But it might be proper to formalize the conclusion by sending this notice and saying, okay, here's how we propose to solve it, like we talked about. Because the statute also allows that if they object to how you propose to handle it, that they can submit the matter to the Department of Revenue for resolution. And when that happens, the Revenue also consults with our office. And we've seen some times where, the city and the county communicated about how it would be solved, and then the county just did something without making a formal notice. And then there becomes a question later when the city objects and they say, we weren't notified, we didn't get a formal notice. And so it's probably always good to follow up with a formal notice of how you're going to correct things. And then regardless of whether there's any disagreement or not, or any controversy, the county auditor must notify both the Department of Revenue and our office anytime you do use the correction of error statute, just letting us know what the error was and how it was corrected. Lastly, counties may require reimbursement from authorities for your actual expenses for administration of their TIF districts. I think about 39% of counties are doing this according to the latest reporting. And so if your county chooses to do this, the county auditor must provide documentation of costs annually. The county may require payment by February 15th of the following year. And if the costs do become disputed, then either the county or the authority or municipality can demand binding arbitration. And that brings us to the end of the annual responsibilities section. Do we have any questions?
It does not appear so.
All right. Well, again, make sure you send them our way if you think of any. But let's then do another poll question. I'm kind of interested to hear out of all these annual responsibilities that you just talked about, which do you think is the most challenging to confront or manage? So give you a few options here, but if you think of there's one that isn't listed, go ahead and just leave a comment in the chat. Just kind of curious as to which of these responsibilities is the most onerous. Is it ONTC adjustments? Is it certifying annual values and data to authorities? Is it calculating increments, including fiscal disparities calculations and excess taxes? Or is it enforcing the 4-year rule or applying duration limits? Again, just kind of curious to see what you guys find tricky or troublesome.
And 60% of people said that calculating the tax increments is what they find the most challenging. Then a couple, in each of the other categories.
Okay, yeah, that's interesting. Again, not having been in a county, I know there's a few different county tax systems, so I'm not personally familiar with how you maintain all that data, and so apparently it's not as easy as the system just spits it out for you. I know there's a lot of proofing and checking involved. So yeah, if there's ever opportunity in the future for us to maybe partner with people to give some additional training on that, we'd be interested. But from our seats, we don't know all the details that you all deal with. So, all right, well, let's take a look at county TIF reporting requirements then. Broadly, there's just a few TIF reports for counties. For the OSA, there's the confirmation of decertified TIF district form that we already talked about. And there's also the annual county TIF information form. For the Department of Revenue, what used to be called the TIF supplement is still being reported as a component of PRISM reporting. And I'm not going to talk about that reporting because it's best left for revenue to speak to. And then for the Minnesota Management and Budget, or MMB, there's those remittance reports that we already talked about that you should send in when you're sending in your TIF enforcement deductions. So let's take a bit of a closer look at the county TIF information form reporting. The annual county TIF information form is due at the end of March of each year and reports data related to the prior year. It communicates several activities to aid our TIF oversight. And I think our oversight helps serve county interests as well as taxpayer interests by keeping authorities in line with the TIF Act. It allows us to verify that the TIF authority is reporting accurately, and it communicates to us how much TIF enforcement deduction transfers we should be receiving from MMB. And the form itself is an Excel file with 4 tabs, and there are instructions on our website. The first tab is the Home tab. There's no entries that are required on this tab. It just contains general information about the form, like when it's due, what its purpose is, and links to the instructions and other resources. But it does contain this red messages table that identifies if there's any unresolved red messages on the other tabs. So a red message appears when an entry or an answer has either not been entered or it contains something that is incorrect. So for example here, the first question on the TIF activity tab requires a yes or no answer. And in this example, it was overlooked. So the table on the Home tab shows that there's a red message on that tab. And sometimes, by the way, depending on the size of your screen and how close you've zoomed in, you might have to scroll to the right to see the red messages. But it's good to check this table before you try and submit your form to see if you have any unresolved messages, because if you do, the system will not accept the form until those are resolved. Okay, the second tab is the TIF activity tab. And on this tab, there's a few questions about whether certain activities had occurred during the prior year. So for each of these, you would just answer a yes or no question and then provide any details when the answer is yes. The activities include new district certifications, districts getting their first receipt of increment being returned to the county for redistribution, distributions of any or decertifications of any districts, the enforcement of the 4-year rule for any districts, and any correction of errors. And then there's just kind of a survey question at the bottom that asks if you are charging for county admin costs, just because so we can kind of share what percentage of counties are doing that. So the next tab then is for reporting distributions and settlements of tax increments for each TIF district. The distribution amounts are reported for the payable year. So you report the calendar year distributions excluding the January settlement from the prior payable year, and then there's a separate column for that payable year's January settlement. And then they automatically total into the total distributions column. Because this might be a lot of data entry for a few counties, that have hundreds of districts, we do offer the option to report the data instead in a comma-separated value file, rather than data entering it on this table, because some people can program their system to generate a report or a file, and that's easier than doing all the data entry. We do actually prefer it when you provide the just populate the data on the table, but in recognition of the amount of data entry for a few counties, the file is an alternate option. The distribution table will be partially populated with information in like columns A and B and whatnot. And then there's a couple of optional columns C and D, where if the county has its own TIF district name and its own code, we allow you to populate those on the form if you want. And if you do, we'll pre-populate that data on the next year's form. So if using those two columns helps you do this faster the following year, you can go ahead and use those columns. If it doesn't help you do it faster, then you don't have to fill out those columns. Then the table also includes columns for reporting the DOR codes, which we talked about earlier. And then again, when the wrong codes are used or they're duplicated, it creates headaches. So please be careful with your coding. And then you'll complete the two columns with the distributions, and those get summarized on line 3 of the form. But if you are doing the file instead of filling out the table on line 4, those line 3 automatically totals what's entered in the table on line 4. So if you're instead attaching the file, you would instead have to hand enter the totals on line 3, but otherwise those are automatically computed for you. So hopefully for most of the districts, you're just entering amounts in columns H and I, and then you would be adding new lines for new districts receiving increment that weren't pre-populated. The final tab is the TIF enforcement deduction tab. At the top, we carry over the total distributions from the previous tab and identify what the expected amount of TIF enforcement deductions would be based on those distributions, just as a reference. And then on line 2, you just report the payment statement, giving the amount and the date. And if the total of those amounts is off compared to the expected amount by more than just minor rounding issues, we appreciate a comment identifying the reason for the difference. So like in this example, it's off by 11 cents, so no comment would be required. If it were more like 1100 or 110 or something, then yeah, we would appreciate a comment to understand why there's a difference. There are a couple of notes to emphasize about this reporting to avoid problems. Most importantly, please don't cut and paste data into the cells. That breaks hidden links and it blocks the data from being imported on our end, meaning it needs to be fixed or redone. And so so please don't do the copying and pasting. It really makes things a mess for us. Check the instructions whenever you run into a district that is listed in a dropdown. We've actually changed the proper handling of that. And to be honest, we're still wrestling with the best way to handle that. But just make sure if you're trying to report for a district and it's not in a dropdown, check the instructions on the way to handle that. And then please submit it as an Excel file. Don't convert it to a PDF, as that won't import. And then do not reformat or skip lines or insert notations into the tables, because that again breaks links. Just put any notations in the comment boxes. Also, do not include any redistributions of returned increments on the form, because those are no longer tax increments at that point. Once tax increments have been returned and get redistributed, the redistributions are not increment. And making use of the comment boxes is often very helpful, so don't be shy about using that. Hopefully this reporting isn't too onerous, and maybe it actually helps you keep tabs on some TIF activity by giving you a chance to focus on it for once, at least once during the year. It is very valuable to us. It can be the first time we learn about a new district or a decertification. It's the primary source where we learn about the first receipt of increment. And we also use it to verify what authorities are reporting for increment. And we've run into examples where there are significant discrepancies, and we've run into situations where we forced authorities to return money to us because they were underreporting the distributions of tax increment. And it also really helps us track down payments that MMB should be forwarding on to us. So please know that you're providing very valuable information, and it's not just another thing you have to report that someone may or may not care about. It is very useful information. All right, are there any questions about TIF reporting?
I don't see any.
Okay, well, we're largely done, but we do want to call out a few resources. First, there are resources on our website. There's the County TIF Guide, which is a critical resource for you, as found under Training and Guidance. The current version was updated in 2019 and will likely update it again next year. Try and update it every 5 years. You may also find our weekly updates to be useful. They're short bits, reminders, articles, avoiding pitfalls, and other notes that we kind of put out every Friday. And you can either sign up to receive them by email, or you can just find them posted on our website. And we also have statements of position on our website about various TIF topics and various training videos. And this webinar and other webinars will be posted there as well. There's also a county TIF checklist. That's an appendix in the TIF County Guide that you should be aware of. We searched for every mention of county officials in the TIF statutes, and we tried to organize them and accumulate them as best we could with the statutory references, so you can efficiently review this annually and hopefully, and know where to go to find details. And hopefully that helps you make sure you've got all your responsibilities covered by giving you that annual checklist. And that concludes our training. So if you have any last questions, please send them our way and we'll get back to you. And thank you for participating. Please feel free to contact us with any questions or suggestions for additional training, and have a great day.